Hello everybody, welcome back. Good morning. Let's have a look at Rex City. So it's a Rex City chart, Rex City morning. It was a Sunday of a pure chaos and catastrophe, and probably feeds into the rest of Monday. To be honest with you, you've got traditional markets open at the moment. They're all feeling the pain already. Obviously they would, because you know what it's like when you see that on a Sunday. You're going to get the same thing take place on a Monday. We've got the S&P 500 pre-market now down below 5,000. A nice bit of a gap opening here. So it's just a pre-market basically. We've not had stocks actually open for the day, so the chances of further continuation are quite likely, to be honest with you. With major support sitting down here, 4,730, where, you know what, I'm going to say a decent bounce could take place from. Decent bounce, to be honest with you. Dixie is obviously still heading down, as generally expected. So obviously this has all been helped down by these, tariff trade situations. There's nothing we can do to get away from that, but it is also the general expectation of this chart that we were going to make our way down. Now, if we're going to get a bounce on the Dixie, it could happen from here. We saw it before when everybody was calling for lower, and we got the actual bounce on it, didn't we? But actually, I think the general direction should be down at this point, all the way down to this trend line that my internet should be able to provide us. If I can just get a little tiny dribble more internet. Here we go. This is a 12 monthly chart. You've got a rising channel. This could be the time that the rising channel actually breaks down, just like rising channels often do. They don't always do that, but they do often do that. And if we can just get a little bit more internet for us all, this would be amazing. If we can just get the internet, that'd be perfect. And stop scrolling like a little silly thing. Anyway, dropping below 90 would most likely be the place to go. This 12 monthly center of the Bollinger Band. But yeah, it's just around 90.8 really is where we are, and trending up actually. So I hate this laptop. I hate all laptops, to be honest with you. That's where we bounced before. It was also the horizontal and also the uptrend of support. But this time, if we do break down below it, here, and I don't know if we'd actually go lower than that. But you could. The reason I think that that's likely anyway, not just because of the formation, is because we've got a situation now, haven't we? Self-induced, obviously. You could say calculated. You could say reckless. You could say a lot of things, but it's happening. And as a result of that, we're looking to see the Fed react to it. And I think that's the gamble, isn't it? Really, that Trump's doing. That is the gamble. That if it's the Fed's job to alter economic policies, through monetary tightening or whatever, they're going to be held to account really at this point. Are they going to do it or are they going to not do it? Are they going to be what's the word? I mean, that's the best way to phrase it. Are they going to do their job as they're supposed to, or are they not going to do their job in spite of being forced to react? That's the question. I mean, nobody wants to be backed into a corner and do something, against their plan, but basically what they are, they've been backed into a corner at this point now. And they have to react, and if they don't react, it would be against their job. So then you'd really find out, wouldn't you, at that point, whether or not they've got the US's and obviously the world's interests at heart. Basically, what I'm saying is, now would be the time to consider quantitative easing and lowering of rates. And you know what happens when that happens, don't you? We've all seen it. Rates have been high. Well, comparative. Higher than they should be. When inflation's going down, it's been going down for a long time, inflation is lower than rates, which, doesn't serve too much of a purpose. Now, the only reason rates would be high is in the event that they need to lower the rates, which is where we are right now. You want to lower the rates? You lower them from here, don't you, really? Inflation's running below 3% in America, I believe. But rates are around 5%, 5.5% still. doesn't really warrant that, does it? You don't really need that. So we might be looking for the next FOMC to really sort of push the the rates down again. Maybe even by a full percent, maybe even a little more. The best indicator I always feel for inflation is the oil chart, and as we've stated for a little while now, this is a downtrending chart, and when you see oil going down, you should be seeing inflation going down month after month, week after week, day after day. And look at this. It's come crashing down now below all the supports. We're below 60, which is great. It's great. I bet you we don't feel that at the petrol station, but that's where we are. So that's all good. Now, everybody's going to be talking about Bitcoin. Where's Bitcoin going at this point? If it's going to keep going down at this point now, you probably get a wick down below 70. That'd be a wick. You could even get a mega wick down, below, maybe below 60, and it would be a wick. It would be brought back up pretty quickly. We've not quite hit the $72,000 zone, which is the previous bull market all-time high, which would be a decent support to go for. And that's obviously just a little bit further away from where we're at right now. I thought that there would be a decent support yesterday, which is basically last week's, which is literally just a few hours ago, really, just 9 hours ago. We were sitting at a decent support. I tried along there, stopped out, no big deal, no big deal. The next support would be here, and if that breaks, the next support is obviously a fair bit lower, 62, maybe even, like I say, wicks lower than that. You could even see a mega wick, a super liquidation wick down to these areas. Reminds me a little bit of the old 2020 scenario, to be fair, doesn't it, really? We all know what happened after 2020, don't we? 2021. So I wouldn't get too concerned about what it is that you see. If you've got cash on the side, put yourself some optimistic buy orders down and see if you can get some decent prices, because wicks, they are over in a minute. They're done very quickly. Candle bodies, that's where the price really is. So let's think about what XRP's doing. What's XRP doing? Well, I'll tell you what, it's holding up extremely well compared to where it broke out from. Remember back in the olden days, which was like November 2024, the olden days. Talk about the big breakout. Here you have the big breakout, and now we have a decent consolidation, but it's absolutely no way near back down to where the breakout level was. First super level of support is where we've come down to already. Horizontal and 50 exponential around the 165. I'm not going to be buying any more of this. I've got so much of this. This is why I'm so blasé when I see these prices, because obviously I'm still significantly up on obviously Bitcoin and XRP, and I haven't really checked the damage, but there's probably still quite a few others that I'm quite up on. Not all, obviously, not all, but enough for me to be generally happy every day, really. If we bounce and reverse from here, it would be appropriate for the chart to do something like that. This is a golden cross retest on the XRP's 50 exponential on the weekly. Now, if we go over to looking at momentum, we'll just focus on momentum if the internet will allow me to do that. Come on, give me some momentum oscillators. Come on, let me see the momentum. Come on, I just want to see the momentum. Come on, you did it earlier, you can do it now. Oh, come on, you stupid. I need to see the weekly momentum. Give it to me. Basically, if it allows me to show you the weekly momentum, we still haven't broken out of the trend line, which is your resistance of money flow and RSI, and it's on the weekly, not the daily. I'm just trying to trick TradingView into showing me. The problem with going away, obviously, when you're a YouTuber, is that in order to stay relevant, you have to make videos every day. But sometimes it's just not possible to make anything of any significance, especially on days like this. I feel like the last time I was away, we had a massive, big, horrendous dump in the market. I'm pretty sure the last time I was away was here, to be honest with you. I'm pretty sure that's where we were the last time I was away, or maybe it was here. We saw a huge pullback in the market when I was away one time. It's definitely one of these. It might have been somewhere else, but I remember being in, like waking up and going, oh God, here we go. Everyone's going to want to hear somebody's opinion on what the situation is today, and the opinion really was, buy the dip, really, buy the dip. It might be a bit scary to buy this dip, but like I say, if you're the Fed and you're backed into a corner and you're being forced to react to something like this, you have to say, right, this is my job to react to this. I don't like the fact that somebody's forcing me to do what I don't want to do, but they are. And if you're going to do your job, you have to do it. You know, no one likes being told what to do, especially when you're in a position of ultimate power like that. But I mean, that's basically what you're being forced to do here. I'm no political fanboy of anyone particularly. You always just got to play the cards you dealt. And at the moment, you know, it feels like you're being dealt like potentially like a pair of aces, which on the face of it, doesn't have the greatest odds, but it's better than a 2 and a 7 or something like that. It's not the worst odds. So you look at those two aces and go, I could win now but I've got to be brave. It gives the impression of opportunity, but statistically it might not. There's so many hands that could beat double ace. But that's what we've got. We've been dealt a pair of aces, so there is a good chance you could win for the pair of aces, like I said. But in order to win, you've got to play that hand, and it could be worse. And I think what we're looking at now, even though we could wick all the way down for XRP down into these areas below 90, for instance, just below 90, we could see that the ricochet and the bounce, with the well, hopefully the monetary policy adjustments from the Fed could end up being a giant springboard to where we can all sail back up to serious highs very quickly. What happens after that is different. It is tricky because if we go back to 2020, obviously, we had more than this wiped off the market value of everything with what took place in 2020, as you remember that. But then the bounce was significant. But the bounce was obviously driven by money printing and literally just handing money out. Whereas this time, the monetary policy, quantitative easing, all that sort of stuff would allow for a giant bounce. And it would be felt across all markets, I would expect that. But with the rearrangement of everybody's economies, I think, the bounce could be more sustained and you wouldn't have this giant big move and then obviously inflation as a result. It's a complicated thing, and maybe something I could make when I get back to my house with a better, more stable internet connection. Then I can show you things, and maybe I'll think about structuring the video a little bit better. Again, I'm not a fanboy of anybody. I'm not saying this is a great thing that everybody's doing or whatever. But just from my own perspective, I am thinking about it a lot. And one thing I was thinking of is, if we're having this big global shake-up of trade, right? Buying less from abroad, more from home, that's actually an all right idea. I mean, I live in Yorkshire, really, so I'm surrounded by farms and fresh food. If I wanted to get it, I can get it. And you have all the woke hippie mob, which is fine to say, buy local, buy local. And this sort of situation does promote that, doesn't it? Really, why am I, Yorkshire chickens getting sent to, I don't know, Abu Dhabi or wherever? I don't know if they are, but you know what I mean. Why can't they just feed us? Why don't we just buy them? They're from down the road. Costs nothing to send them over my way. Why send them some millions of miles away? Why do that? Buy local. And I suppose that's the whole point of all of this, isn't it? From America's perspective, make local, buy local. And actually, that makes a lot of sense if you're talking about if you're one of those people that's into like going green or whatever. Then that's a great idea, isn't it? less transport, less oil, buy your local produce. And then that's just from a food perspective. Obviously America's talking about manufacturing perspective. Make local, buy local. Yeah, yeah. Everybody sort of benefits from a national perspective. So there is merit to the idea, and again, I'm always a glass half full kind of guy, and it kind of got to look at it like that. Like, it always sort of annoys me when people still moan about Brexit, really. So, I didn't vote for it, but it came in. So you've got to look at the positives. What are the positives? There's got to be some positives. You can't just keep moaning about it year after year after year. Let's just focus on the positives. We're not going back to what it was before. So let's look at the benefits of it and focus on those. This can't all be bad. It's just not all going to be bad. I mean, you can even see it already. I mean, with all the trade wars already. Yeah, there's been tariffs on the UK, but there's half the amount as Europe. If we were still in the EU, we'd be tariffed twice as hard as we are at the moment. So I'm not saying that's a benefit, but it's definitely not as bad as it could have been. Do you know what I mean? Glass half full, everybody. Let's have a glass half full. So XRP realistically could bounce and reverse from here if, of course, the Fed reacts sooner rather than later. Whether they're going to react at all is a different story. And the ball's in their court, really, and that's what we're waiting for. We're also waiting for the American markets to open today, 2:30. See what happens with that, or is it 1:30 now? The clocks have gone back in the UK. The clock's gone forward in the UK. It might be 1:30, but either way, we're waiting for the American markets to open, and they might open with a bit of shock. Pre-markets have opened down significantly when the actual markets open later on today. You might see another big drop down, and that will drag everybody with it. But yeah, I mean, opportunities exist at super low levels. When the last big crash took place in 2020, I didn't buy that. I didn't buy that significant low. I waited for a little bit of time before I recognised the opportunity and the trend. Trying to buy every single dip as and when they take place. Sometimes it's going to be very difficult, especially when you're dealing with pure emotional panic selling like what we're seeing at the moment. Red candles are just a reflection of emotion, and that's certainly what we've been seeing for a little while. Anyway, let's be glass half full. There is a goal here that's trying to be achieved. The goalposts are quite tight, I have to say. It's not an open goal. There is a good chance of missing it, or at least getting the post. So we might not see the money printers turn on immediately. Depends if everybody's on the same page and willing to play ball. They might not. So I'm going to leave it with you there. Like I say, there is supports for XRP here, but there isn't one for Bitcoin, not really. And there's supports for the S&P, but not exactly where we are at right now. It does have to go down a little lower to hit that major support, but only a little lower. But we'll see. We'll see where we go. Like I say, I'm relatively optimistic about how this can all turn around. But does it turn around today? I don't think so. It will require some intervening by the old men at the table, and then we could be looking at the same general expectation, which is that we do see new all-time highs printed by September, which is always the goal. But we'll see, and it could all go to zero, which, again, this is the gamble, isn't it? This is the pair of aces that we've got. Easy to feel comfortable with a pair of aces, but if you play poker, how many times have you lost with a pair of aces to what would appear to be a pretty bad hand when you were first dealt it, Oh, I've got a 2 and a 3. Damn it. Well, you know what? You could get a straight with that easily, and a straight will win. A pair of aces looks great to begin with. You could easily lose. Right, I'll leave with you there. Good luck out there. There's an element of luck there. This is a gambler's market almost at the moment. So feel free to go about your day the way you feel most comfortable with. Pair of aces or not. Right, thanks for watching. Hope you have a nice day. Take it easy.